Yo, what's up, guys? What's happening? It's your guy Ken J, it's your guy JFS, it's your guy FX Terminator. So, you know what it is. Today we had to terminate, we were given a chance to terminate USD card. So, we terminated USD card yesterday actually, but we took our profit today off the market. We held that trade for over 23 hours or so, and we're able to get over 60 pips of the market. So in this video I'm going to be giving you the breakdown of the whole process, the whole methods I use to get this sniper entry, to get this pinpoint entry. So let's get it. Yeah, welcome back, guys. So here's the USD card that we traded yesterday. Here's the chart of the USD card. So in this trade, before I normally do start, or before I started taking my trading decisions and all, I was firstly trying to understand the language that the market speaks. You understand? I tried to understand what it was trying to say, what direction is it giving us, or what direction is it telling us that it isn't. So now we have this strong bearish movement. This movement has been since Friday. You understand? It has been since Friday. So we had this strong movement to the downside. So we can see price forming lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low, lower highs, indicating that we are in a strong bearish movement. We're in a downtrend. You understand? So now the place I want to be looking at is this recent chart, the recent data. You understand? The recent formation you get. So now in this market, I understood the market, the structure of the market, which is being our downtrend. Then we have this lower low broken, we have this lower low broken, we have this one broken, and we have this high. This level here was the level I identified as my key level zone. You get. So this level was a key level zone for me because we had a very, very strong impulsive move off that zone, and that zone was basically at 1.35366. You understand? Price is almost getting there. So we have that zone as a level. Since we're in a downtrend, we have this strong level, this push to the downside. So yeah, we identify our lower low, lower high, lower low. So we see price making lower low, lower highs, lower low, lower highs, and so on. But we have this break here. These are lower low, broke to form a new lower low. Then is this level that I had to pay attention at. This level, you understand, on Monday is a level I was paying attention to, though I don't trade on Monday. So I used Monday information to trade my Tuesday, you understand, and I used my Tuesday information to trade my Wednesday, and my Wednesday to trade my Thursday, and so on. So now we have this low, lower low here, and if you check something, we didn't complete the formation. Price couldn't break this lower low, you understand. Instead, we formed a lower low, a lower high, then a low. Then price broke a key level zone. This is one of the key level zones, and this is another one because it's what? Higher high, lower high, and so on. So this is one. This is a key level zone. So yeah, price broke this high to form this one and made more of a retest and pushed up. So for this movement, for this pattern, most people call it a double bottom pattern. Some people call it a W pattern, and some people call it liquidity. I personally call it liquidity level. You understand? So liquidity is basically where the money is. People are taking positions at this level and putting their stop loss below, which shows that there are money there. People are putting their entries at this level and their stop loss below, which shows that money is inside the market. So Now we see that price formed this. So now let me quickly draw, let me draft the whole thing that is happening at this level. So we have a lower low here, we have a lower high, price unable to break this lower low, then forms what? A high, then forms what? A low, then forms what? A higher high. You understand? So this is what basically just happened at this level. So I haven't seen this. I'm saying that there's a switch, there's a change, you understand, in the direction of the market. We were once in bearish movement, and then we turned into what? A bullish movement, which is price making higher highs, higher lows, higher highs, and so on. So at that moment when we took this trade, we were exactly at this level, because we saw what? Price breaking this key resistance zone, and as well this. So now what do we want to do? We want to take advantage of this movement. Remember, we were here, the data had not formed, all this bearish movement data had not formed when we took our trade. So let me complete this drawing. So we have this liquidity here, this is liquidity, then we have this break of structure and a retest, and then a continuation. So basically that's what just happened here. We didn't take this trade, that happened today, you understand, and we didn't take this one, you understand. It was later that we had to take a trade here. So this is where we entered from. So let me get to how I was able to get there. So now I want to get to the, since I've seen this on higher time frame, I've seen all this movement, break of structure of key resistance zones, you understand, and so on. So since I've seen this, because we broke this level, this is a key zone, this is a key zones. So we've seen this and want to take advantage of the movement, you understand, because we changed to an uptrend. So an uptrend is higher high, higher low, higher high, and we're expecting to form a higher low. We don't want price to break this level, but let me quickly get to the 15 minutes so that we can see further what I'm talking about. So now on the 15 minutes, if you check, remember I said that this level had not formed. We were here when we saw an entry around here. So now we saw that price is making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. So after doing that, we identify these lower lows, because we call this movement a corrective movement. We don't call it an impulsive movement. This movement going to the upsides, forming higher highs and higher lows, higher highs and several higher highs. Those are the impulsive moves, but the corrective moves are the ones that we just see price doing to form what? A higher low, you understand, depending on how the market structure is. So I've identified this level as the break of structure. We had lower low, lower high. This level was broken to form a new lower low, you understand. So we want to trade with the trend, you understand. So we have this, we have this, we have this, and guess what? We have this key level. We have this key level here. If you check, this is exactly what happened at this level, you understand. We have a double bottom, first touch and then second touch, stating that it's a strong support zone, you understand, stating that it's a very, very strong support zone. So we have this here, and then we have the same formation at this level, stating that what is a very, very, very strong support zone. So we want to take advantage of it. We have this strong impulsive move to the downside that broke this key resistance zone, this level here. It broke this key resistance zone and took us to the upside, you understand. So now we now want to enter the market. So before all this started, I drew my trend line. Because I make use of trend line most times whenever I'm taking my trading decisions, you understand, and I want to observe what's happening on the trend line. So now I'm drawing my trend line. I've seen this break here, so it makes my trend line valid. It gives me the opportunity to draw my trend line correctly. So I don't want to draw my trend line when we are still here. I want to confirm that there's a break of structure at this level. Price broke this level. That's what I want to confirm. So when I confirm that, then I draw my trend line. You understand? I proudly draw my trend line. So now I've drawn this trend line. So you see, now price is going with the trend. I connected this low with this other low, you understand, before this one formed. So now that I've drawn this trend line, I now want to identify, because I'm seeing that this is a key level that was broken. We have here being broken, lower low, lower high, lower low, and what do we have? A high, a low, then a higher high, higher low, and so on and so forth. So because this is a 15 minutes time frame, the whole formations are tiny, but when you get to 1 hour, when you get to 4 hours, you see a larger view of all of this. So here is where I then identified. So I went to the 1 hour to know what exactly caused this. Remember, this is where we were, and we found an opportunity here. We were patient enough to wait for price to come to us. We did not chase the market. We didn't buy from here. We didn't sell from here. We don't want to do that. We want to wait so that we can flow with the mini trend. So here we saw this level. We saw this fine sweet level, which we call our double bottom. Some people call it the W pattern, and liquidity level. So I saw this level, a very, very strong impulsive level from this level. So I identified here, and then I called in my demand zone. After calling in my demand zone, I waited for price to come to me. I did not chase the market. So this is where we had our entry. Before we took this entry, we had two confluences, which are the trend line and as well a demand zone, stating that this is a high probability trade, and that's what made me to be very, very confident enough to take this trade. So I took this trade at this level. Remember, I said I chased over 60 pips. So let me get the figures. So I chased over 60 pips of this market. Over 60 pips of the market, and a 1:4 risk to reward trade. You understand? So this is basically where we took our trade. So we had a 1:4 strong, a very, very strong trade. So this is a 1, this is a 4, that's the risk to reward RR. 1:4. You understand? We had 14 pips stop loss, and then we had a 60 pips take profit. So if you're going to get if you're getting a 1:4 trade, it means that you're risking 1%, or you're risking wherever percent to get times 4 of it. So having this, you're going to have a very, very good trading management strategy. You understand? That's the risk management strategy. So you're risking 1 to get times 4 of it, so making your account to be very, 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 very strong. So meaning that if we were to take out that trade the next day or the next day, we know we're risking just 1. You understand? So if we are to lose it, we know that we are still in profit, because the previous day we got times 4 of our risk. So you need to be consistent in this business. You don't need to chase. You don't need to chase the market. You don't need to play around. You don't need to take it as a game. You don't need to trade like as if you're playing a game. This is a business. You understand? So we need to be serious when taking business decisions and business plans. So secondly, I was able to get another entry. You understand? I was able to get another entry at this level. So basically, I came down to the 15 minutes to understand better of what is happening. So here we see that price broke this level. You understand? But it did not completely break the level. So what I'm seeing here is that we have price giving a fake out. There are some people who make use of buy stops and sell stops. So they want to enter when price has broken the zone, a key zone. So price broke this level, and I'm sure some people will be holding some buys here, but price came down against them, came down very, very well. It came down very like 29 pips. It came down, or 20, let's say 30 pips. It came down 30 pips, and then went back up. You understand? So I don't want to be the sellers. I want to be the buyer. You understand? Because we are the ones, buyers are the ones who currently do have the market. You understand? Buyers are the ones who own the market at this period of time. You understand? At this moment. So I don't want to be a seller. I want to buy till TP. So price hadn't reached our TP. Our TP was still above here, but price came here, retraced, and then did more of a continuation. So yeah, the way I took this trade at this level, I saw that this was a retracement phase. I have my Fibonacci here. So you can see what happened here. Price reacted from this 50% Fibonacci ratio level. You understand? So price was able to react from here. It was able to reverse. So this is a key level. 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 The 62%, the 70%, the 70.5, the 79%, all are key levels. So that is what I saw. So in this place, I'm seeing price making lower low, lower high, lower low, lower high. This place is one key resistance level. This is another key resistance level. So I have seen this. I've seen that price has changed. The whole formation, the whole market structure, because you know that we're in a corrective move here. We turned it into an impulsive, because we know that we're in an uptrend. You see this impulsive move, breaking this high. That's an impulsive move. So we now see price doing more of a correction in the market. When we have this price doing this correction, we now had to wait for a break of structure, a valid break of structure of this key resistance zone, and I saw this key. So we had this first break of key one resistance zone, and we have the second break of key 2 resistance zone. You understand? So what I want to do here is, I've seen what happened at this level. So I know that the bulls are kicking in. You understand? So we're having patience. We don't want to be the sellers. We don't want to bring price to us. We don't want, because it's very, very risky, because we are initially bullish. You understand? So we don't want to be selling, because most times it may not work. Most times it works. Sometimes it works. So now I've identified this level. So we see a very, very strong impulsive move from this level, and then we see that it's from this area that we are getting these impulsive moves. You understand? So we want to wait for price to get to us. So I've drawn a box, and I'm going to call it a demand zone. So here's our demand zone. So we're waiting. Price was at this level when we did all of these drawings, or this particular drawing. Price was here. So I was having patience on price to come to us. You understand? We don't want to chase it. We want to wait for it to come to us. If it gets stops out, we get stopped out. If you reach TP, we reach TP, because it's what it is. That's how the market is being built. You understand? So I took this trade here at this level, and then I had my TP at the initial overall TP, which was in our initial, because I still had the trade here, and this was my overall TP. This was my main TP. So I took this trade from here down to this level. You understand? I took it down to this level, which was a 1:3 trade, 9 pips stop loss, and then a 30 pips take profit. A very, 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 very beautiful smart trade I took right yesterday on USDCAD. So this signal was actually posted on our channels. If you want to be part of the channels, you can join. You can enjoy our free services. We give out trading signals from Thursdays down to Friday. You understand? We don't trade on Mondays, because we use our Monday data to trade our Tuesday data. So we want to know what is happening on Monday in order to trade Tuesday, and we want to know what's happening on Tuesday in order to trade Wednesday, and we want to know what's happening on Wednesday to trade Thursday. Then Thursday, we want to know what's happening on Thursday to trade our Friday. So that's the technique. So it was very, very beautiful, a very, very beautiful trade I took on USDCAD yesterday. So it lasted for over 23 hours. So this was my entry point, because I'm a day trader. I trade like a day. I'm a day trader. So it lasted 23 hours. So yeah, this is where we took our profit. So 23 hours 45 minutes. You understand? That is the whole duration, that's the whole time that I held this trade. So well guys, that's it for now. Please don't forget to like, subscribe, share to people who who want to be part of this business, who are aspiring to be a trader. This could be a video to start up their trading. This is a very, very simple technique, a very, very simple way to trade. So if you want to learn more of this, just join the channel. We give educative content. Sometimes we post educative content, we give motivational quotes and so on. So just be part of the Terminator. So let's get it. See you guys next week.